Hi, welcome to a series of Shojin Property Chats. So today we're joined with CEO Jatin Ondhia from Shojin Property Partners. And the question is buy-to-let still a relevant property investment strategy? So Jatin, people have been investing in buy-to-let for years. Why is it changing? Is it still a good investment opportunity?
I don't think it's a good investment opportunity right now. A lot has changed over the years. Property investment and buy-to-let in particular used to be a fantastic way of investing your money for regular income and long-term growth. But the government has changed all that. They don't want buy-to-let landlords. They want to improve the standards in these properties, and for that you cannot have lots of small landlords. So the way the government is discouraging people from going into buy-to-let is by increasing regulation and increasing taxes. So people that may have made a significant amount of money in buy-to-let over many years are now starting to struggle because the returns are no longer decent enough to justify remaining in that industry.
So if an investor is looking to invest in property and it's now not lucrative anymore, what are the options? And also for landlords that have a portfolio of properties that aren't making the high enough returns anymore, is there an option for them?
I've noticed over the last few years, you've actually seen a reduction in the number of landlords. People are actively selling their property portfolios because they're realizing that the returns are going to get worse and worse over the next few years. And you're seeing this across the board. Every year, the interest deduction that was allowed in previous years, that's getting reduced. And so it's only going to get worse. So many people are now looking to either cash out of their property, or if they've got money to invest, they're looking at alternative ways to invest that money apart from buy-to-let.
What would these alternatives be?
There's lots of opportunity in the market. There always is. The problem with buy-to-let is people have always focused on rental property, residential rental property. But if you look outside of that, you've got things like student accommodation, you've got senior living facilities, warehouses, distribution centers, offices, and there's a lot more opportunity out there. You can make much better returns, lower risk, lower hassle, and you're not getting clobbered by the government all the time on increasing regulations and taxes.
I think as well, like investing in property, sometimes it's hard to get your head around investing into a buy-to-let. You talk about student accommodations and warehousing and stuff. How many people actually know about something like that and would have the opportunity to invest?
Yeah, I mean, and that's a very fair point. Most regular people wouldn't understand anything outside of normal residential buy-to-let. So how, if we consider how they might get access to these other opportunities, it's generally by working or investing through a kind of crowdfunding platform where they can invest smaller amounts into a much larger pot of money, which then goes on to make the investment. So if we take, for example, purpose-built student development, it would cost you 10, 12, 15 million pounds to buy a building, and that's out of the reach of most normal people. But you can still invest smaller amounts through these crowdfunding platforms, which will enable you to invest in those assets, generate regular income, and benefit from capital growth, and it's completely hands-off. So you don't have to worry about doing anything. No one's calling you in the middle of the night because the boiler's broken.
Okay, so you mentioned crowdfunding, and can you just tell me a bit more how that works? As I say, is this all new age thing, this crowdfunding, or is it safe? Just get a bit more detail on how people can invest through crowdfunding.
Crowdfunding is first of all, it's a whole group of people getting together to invest in something. Just like you might get together with a group of friends to invest into something together. The great thing about decent crowdfunding platforms is that what they do is they find the right kind of investment opportunities. They do all the due diligence on your behalf. And then once they're certain that it's actually a good investment and worth putting onto their investment platforms, then they'll invite everyone to invest, as much or as little as they like into these opportunities. The great thing is, though, that they do all the hard work for you. They find it, they analyze it, they manage it after it's done. And so for an investor, it's much, much easier. And you can basically sit back, knowing that your money's working hard while you carry on doing whatever you're doing.
Okay, so you mentioned crowdfunding, but what do you look for in terms of a good crowdfunding company? I mean, I've heard that there's a lot out there. How do you find a good one versus a bad one, or what do you look for?
Yeah, no, that's a really good question. And I think the first and most important thing is to make sure that whoever you look at is regulated. There's a lot of rogues out there, and especially being on the internet, it's quite easy to go onto a website where someone looks legitimate but actually isn't. So the first thing is make sure they're regulated. If you're in doubt, go onto the FCA register and do a search for that company, and that will tell you if they are genuinely registered. I think the next thing though is, how much are the crowdfunding company, how much are their interests aligned with yours as an investor? For me, it's, within our business in particular, we always found, from the beginning, what investors really liked was the way that we align ourselves with their interests. So, the first thing is doing thorough due diligence on every project, but then making sure that you're investing alongside the investors. So we invest in every single deal we put on our platform. And then, rather than platforms that take massive fees up front, what we prefer to do is share profits at the end, because once again, we feel it's an alignment of interest. So, look out for these things. How is the crowdfunding company and the platform, how are they protecting your interests as an investor? If they're going to take great big fees up front and then walk away from the deal, then really you should reconsider. One of the things that we always make sure is because we're in there until the end, we oversee the project constantly. We give constant investor updates to let them know how things are going. And if it does look like a project is going off track, we step in, we help the developers, we make sure that they will try to make sure that they can get back on track. But otherwise, just keeping that oversight means that for the investor, it means that someone's looking after their interests.
I think that's very important. You highlight the risks and how you try and mitigate that and how you're aligned together. And it's not about the attractive returns at the beginning. So that's an interesting approach that you take.
Yeah, absolutely. Don't get seduced just by the returns. Look at everything else. High returns in themselves don't necessarily mean there's significant risk, because actually there is a lot of money to be made in property. But pick the right projects for the right reasons and make sure that your interests are protected at all times.
So knowing what we know now about buy-to-let not being the ideal investment opportunity going forward, how would one person go about investing in a crowdfunding company to invest in a project?
Right, so the first thing is to go to the website itself, register on that website so you start to see the opportunities. You'll have to go through an appropriateness test to make sure that whatever you're shown, whatever investment opportunities you're shown are appropriate for you based on your knowledge and background in property investing. And then that's it. Then look at all the projects that come your way, find some that you like the sound of. You can call and ask questions as well. It's just because it's online doesn't mean you have to just do it online. You can always call and ask questions. And then when you're ready, you transact online.
Perfect. So that's all from us. Hopefully you found it useful. If you have any questions, please put them in the comment section below. We look forward to answering them in future videos. If you like this video, please comment, share and like. From myself and Jatin from Shojin Property Partners, until next time, bye-bye.